After spending weeks working this thesis, surveying all components, speaking with people a lot smarter than me, the parameters have now been established, where I'm setting up for one of the biggest plays I'll make this liquidity cycle. For context, I recently sold all my spot Solana for an 1100% gain from the lows of $12. Watch that video if you haven't already to see my exact reasoning, as it'll help reinforce everything it is I'll say in this one. But the TLDR is I think I can outperform SOL from this point on. I believe the gains of Solana are almost tapped out, where even just a 3x would mean a 450 SOL, which was around my targets anyway. I know I can outgain a 3x no problem, and so that's what this video is about, the assets I'm looking at to do so. Now I'm going to say subscribe, but to make it very clear, I'm not a YouTuber or content creator. If anything, this is just a little arc in my life. I'm aware of the demand for me to post more often and actually take this seriously. I'll see what's what later on, but for now at least you know there's no ulterior motive to pump out useless content. Also sign up to the official exchange partners of the channel CoinW and JumpX. CoinW are giving away free money for just signing up with my link. It's a special campaign we've set up. Something like $100 for just opening a trade. And JumpX, a fair desk derivative, also giving huge rewards with cheap trading fees. As always, the two are non-KYC exchanges where you don't even need a VPN. Literally wherever you're from, the US, Canada, those highly restrictive countries, you can use the exchanges. I've talked extensively with their teams. This is the case for another 2 years. A big reason I chose to work with them. So what crypto am I buying and putting all this money into? Let's first make it very clear that there's a really decent probability I don't even roll this cash back in. I was max long for almost 2 years in anticipation for new all-time highs in this digital asset space. I'm still confident that we get aggressive price discovery, but there is a small chance, more so than any other point of this cycle, that markets could spill over here. This has nothing to do with the crypto sector on its own, but it is at mercy of the macro conditions, specifically the altcoin sector. Even if Bitcoin somehow gets its gold commodity moment, that doesn't mean anything for altcoins. And so I've hedged accordingly by banking profits on Solana. But in the scenario that we don't tank from here, I obviously can't just sit on that cash. It'd be too great an opportunity cost. And so for the remainder of this video, we'll be discussing why I plan on rolling fiat into the assets I'm about to name. Again, given the cycle resumes as normal. I don't want to waste time, so I'll just say it. It's the DeFi sector I'm mostly looking at. I know, literally contradicting so much of what I've said in the past, but things have changed dramatically from even a month ago. I urge you to hear me out, and by the end of the video I think you'll see where I'm coming from. Okay, a quick summary. This cycle has significantly more projects than its previous counterparts, and so even if the total crypto market cap gets to something like 10 trillion, that's still not enough to cause an everything up cycle across the board. This is standard knowledge and something we've recognized more than a year ago, but is perhaps even more the case than ever, given the time crunch of perhaps topping earlier than we ever have post-bottom and post-halving. With this established, we came to a couple conclusions, the most paramount being the necessity to ride strength. As the idea is, even if something's pumped a lot, it's the fact that it's actually catching a bid that makes it stand out in a sea of non-movers. And so we invested accordingly, bidding projects like Sol and Tau, Arweave, whatever it is. Something like a Kaspa is a perfect example. I was not early on Kaspa whatsoever. I think the first time we mentioned it as a good buy was back at 5 cents. And at the time it seemed like a novice move to be doing so, given that Kas already pumped 10,000% from its launch. But given that it's a crypto that was showing so much strength and my conviction on betting strength, Kas is now at 16 cents, so more than a 3x. And there's a really good chance from that 5-cent level Kaspa ends up doing a 10 to 20x, finishing this cycle at around 50 cents to $1. Now here's the important thing. It's not that the strength approach no longer works, but for sizable returns we may be too deep in. Going back to Kaspa and how it's at 16 cents, I'm now not going to move my targets of 50 cents to $1 higher. That's a terrible mistake to make. So the reality here is these cryptos showing strength, at least in my opinion, are slowly reaching their targets. Now Kaspa is one of those crypto that can reach those high valuations of 50 to 100 billion, giving Kaspa 12 to 25x from now, which is why I'm putting a little bit into it. A 50 cent to $1 Kaspa was always base case. We're extremely close to those targets, and given my vast personal exposure into strength, I have to move further down the risk curve. I can't go all into strength. If you want safe, clean 3 to 5x's, by all means, yes, possibly more, but with lower odds. And if I wanted those returns, I would have just stayed in Sol. So with the pot I took out of Sol, a small amount will be going into those new cycle coins showing strength against BTC BTC and USD and such, but not much more than that given their limited returns from now on, and also the fact that so much of the remaining part of my portfolio is already exposed to these projects from much lower levels. Okay, with that out the way, where do we look now for outsized gains? There's the meme coin sector. I feel the meme coin mania is over. The few established mid-caps will probably have one or two get to big market caps, but it's hard to invest in low-cap memes, plus I already have the allocations that I want. I don't want to go further in. AI is my bread and butter. I already have the exposure that I need into Tau render near AKTIAs. The smaller caps I also got on lock with OXONet Mindcubic, but after that is the micro caps. I can't afford to put this kind of size into micro caps. Remember, the whole point of those is basically the ultimate risk-reward plays. You'll probably lose, but if it runs it changes everything. But that type of gamble you take with very small percentages. So if you're underexposed to AI with those mid-caps and some bigger caps, maybe you should stop here and take a serious look at those, as I still think they run hard and may be able to give you the gains you want. But I already have my share, so I won't do huge AI allocations. Gaming is great, but gaming actually may not run. First, it's already had its introductory cycle in 2021. Second, it's also run relatively hard this cycle. And if macro conditions do unwind, I don't see gaming as a sector doing well at all. Now, in the event of a normal cycle, gaming would do amazing, which is why I've still got all my allocations into things like IMX Beam and all those individual games. Hence, I don't feel the need to go even harder into that sector. Real-world assets are cool, but maybe a cycle too early. And so after that, where do we really have left to look? One class of crypto are these low-float, high FDV tokens. The joke of the town for a while, and to many they still are. But I do think there's a possible trade here. These crypto have gotten smashed since their launch and are being completely disregarded. But that's exactly why the risk-reward may be in your favor. For example, something like a starknet. The token goes live and literally turns into dust. Has little going for it, poor community, nothing on the demand side. But the reality is they're down in those deep value zones, with the golden drawdown being 90%. So again, something like a starknet, Dimensions, ZK Sync, Layer 0, Manta Network, Blast, whatever it is. If they get down 90%, remember, just a return to what they launched at is a 10x. Completely forget about all-time highs and the idea of price discovery with these crypto. Instead, treat it like a range, where the top is what it launched at and the bottom is minus 90% from that price launch. Now it definitely could plunge under and go to zero. Remember Friend Tech and how shilled it was by these influencers making tens of thousands off their community just to never talk about it again. This one went to a definitive zero, dropping as much as 97%. But these VC coins have at least one edge: the fact there are VCs involved. They've a lot of investments made into these projects and won't get their unlocks until months to years from now. The likelihood of them completely going to zero and never putting in some run is low. And so that's why I plan to put a very small amount of money into these crypto. But now we can finally move on to the main niche of projects I'm looking at, which is the DeFi sector. Here's why I'm focused on DeFi. Firstly, because they haven't pumped at all. I'll be using Curve as the main vessel to make my arguments. Look at this Curve chart. It's almost unbearable to look at. You know how you want your coin to be close to price discovery if not already in it. Well, Curve is still 95% down from its $6.80 high. The crypto should be showing strength in USD. Well, Curve, since the start of the bear market, has been making lower lows and lower highs ever since, putting in new lows as late as last week. We also say the coin should be showing strength against Bitcoin. Well, Curve BTC almost looks like it has no pulse. And so here I am, contradicting everything I say a crypto should have for more than a year. And yet still I have the audacity to bring up Curve and the DeFi sector. Why is this? What's my reasoning? To get you all on board, the biggest obviously has to do with returns. Right now Curve is at 30 cents. It'll probably be more when you watch this video. But I first mentioned it on Twitter a week ago when it was at 22 cents, meaning it's already up 35% since. And I also quite literally said verbatim Curve and DeFi is where I'm looking last video on the 9th when Curve was 24 cents. This is why I urge you to be following me on Twitter and watching all these videos so you don't afford to miss this information. But let's assume going forward, Curve at 30 cents is the starting point. A return to all-time highs of 680 is a 22x, even just half is a 10x. So this is where I'm coining the it hasn't pumped yet idea, and that there's a lot of gains on the table if we just return to normality. Now, although very true, this This is quite the beginner way of thinking. There's a lot of crypto in the same boat, and to invest based on this alone is foolish. Gala Games going back to all-time highs is a 50x. Filecoin going back to highs is a 60x. Polygon showing the same type of weakness across the board. So what makes Curve and DeFi different? Why am I referencing them in specific? It's because unlike Gala and gaming, DeFi coins aren't as niche dependent, and unlike Polygon and a bunch of other chains, they're actually being used. DeFi throughout this entire cycle hasn't stopped moving a second. It has usage and revenue and stats, and the fundamental point of longevity. Projects like Curve and Aave and Convex are such vital parts of this entire space that we know they won't go anywhere. Whereas chains like even a Cardano, with all the excitement and community it has, doesn't necessarily have to be successful. Where with DeFi, it keeps printing fees and working. And so with these charts, I think we get a repricing. Look at these fib retracements. Even a revisit to this cluster of the 382 to 618 levels is a 10 to 15x. The easy gains are gone. All the winners have ran already. There's not many more avenues to get these gains without substantial risk. I think these DeFi coins are one of the few options. So that's my reasoning. My edge has always been using logic when it comes to different plays. But let's now also throw in fundamentals and charting. First, the founder of Curve, Michael Egorov, is out of the picture. He got liquidated of all his tokens, a big reason behind the ugly drawdown. But with him gone, that risk or potential risk is no more. Tokens move from weak to strong hands. Last year, Curve also underwent a $60 million hack. At the moment, those suck but often act as renaissance moments in the bigger picture. Curve also recently dropped its inflation rate down to 6.35%. And on top of that, there's a lot of Curve token locks happening behind the scenes. For a year, we've had the same amount of Curve locked up in Convex, but in June I started getting alerts about the sheer quantity of new Curve tokens getting locked. In fact, we saw 100 million Curve get locked from July to August. This is the single largest one-month lockup amount we've seen since the inception of Curve. This is what prompted me to really start looking at Curve, as whales in my opinion are prepping for something a lot of normal retail don't yet know about. Also massive bullish divergence on the charts, as well as the extremely rare 3-day bullish divergence. Convex I also really like with a lot of the same reasoning as Curve, sitting at 250 a return to highs is a 25x. Just getting to the 382 is a 10x. No disparity with fully diluted market cap, meaning circulating supply syncs up with the total. This isn't some meme coin down 97%, it's a neglected peer-to-peer finance powerhouse that's unfortunate to not have the face of a cat. But I know how whales work. They need to catch a bid and not just a small one. I think they're looking here. Aave, the other one I'm looking at, who recently proposed a fee switch where they buy back the token and distribute it to stakers. Still down 85% from highs, and yet everything about it is moving perfect. The Go stable coin maintaining peg after a shaky start. Good tokenomics, almost 12 billion in TVL. If you haven't figured it out by now, we're in the middle of the bull market. The blow off top could be right around the corner. And we're trying to pick the bottom on a sector that has been an absolute no-show since its highs of 2022 that literally no one is talking about. All for the hopes of making a 10 to 20x on the lower end. Something like trying to fix a plane flying in midair. But if you have a better idea, let me know. Also, one last thing, if ETH pumps, which I don't know if it will or not, but I obviously hope it does, then all these DeFi plays would act as a beta. So there's another thing. If you're somehow still watching and aren't subscribed, I'd be extremely interested in how that works, so let me know. Any questions, message me on Instagram. There's a link in description. I use that as my main creator to community bridge. Sign up to those exchanges. And you should see me in another one, but no promises.